Today I want to talk to you about something that you hardly ever hear anything about in trading, yet it's absolutely crucial to the way you trade, and in fact it's a determining factor whether or not you have a successful trade. Hi, this is Load with Black Bear Dog Trading. Welcome. I've been away for a little while, but I'm back, and let's start exactly where we left off. It's not a secret, but there is a very well known trading analysis that is the secret really behind every successful trade that you hardly hear about, that very few traders talk about. In fact, you are hard pressed finding any videos online about this particular topic. So, what is it? What is the overlooked truth behind every successful trade? Well, it is the way analysis is conducted. At present, most retail traders will analyze the current chart, which if we, let me draw some arrows so you can follow along what I'm saying here. The current chart would be this chart right here. And most traders, that is what they focus on. And they prepare because in this case, we have a 21 EMA exponential moving average. And here is the next candle. And now it's a matter, well, this is going to go down and I have a sell entry. Let me prepare, let me make a sell, and I'll be set golden. And that's exactly where the problem is. The problem is that you are basing your analysis on an active candle, and it doesn't matter the currency pair you trade, it doesn't matter the time frame you trade. The problem is that the candle you're basing your analysis on is active. What do I mean with active? I mean it is not a closed candle. In this case, sure enough, the candle goes below the 21 SMA, and for many retail traders, this would be, but look what it just did. It hopped right back up already. If you would have entered right at this level right here, already you would have had a losing sale, not even considering the spread that you have to cover first. So you don't want to do this, and I know that this goes against all reasoning because it's called life analysis, but you do not want to base your decision on a live candle, not ever. First of all, no one can predict where the market is heading, where price is heading. No one. Not the best expert in the world, not the best trader in the world, doesn't matter. They're trading stocks, bonds, commodities, options, crypto, Forex, doesn't matter. No one can predict where it's heading. We can only guesstimate. And the best chance you have for guesstimating it right is by looking at closed candles. This means previous candles, like right here, for example. These are all previous candles, and they will give you an indication of where price might be heading. And based on that, you can then make a intelligent trading decision: buy, sell, or stay out altogether. This works the same for absolutely every currency pair. It doesn't matter which one you take. Let me choose another one. It doesn't matter really here. I'll open up this one for now, which is the Japanese yen, and you see the exact same thing in play right here. It made an effort to go above all of them are configured, by the way, with a 21 EMA based on closed price. So again, same thing. Price right here went at the 21 SMA. It went above, so should have signaled a buy entry, but then it retraced, and now it's even giving slight hints of possibly going down. So here we go is the next candle. So, and this candle again fluctuating back and forth. This is where the problem is. You cannot base your analysis on an active candle. I know live analysis is all the rage, but it's not what you want to base your trading on. Again, You want to go with a closed candle, a candle that has quote unquote expired. It's no longer moving. It is the way it is. It has its high, its low, it close, it's open, and they are set. They will no longer change. In this case, as you can see, we're still going yo-yoing back and forth above the 21, below the 21. So what do you do? What do you do here? What kind of trade is this? Personally, there is no trade, and I base this decision on the prior candle, and the prior candle tells me we ended up in a doji or a pin bar, whatever you want to call this, and this kind of broke even right at the 21 SMA right here. So it's a wait and see. I'm not going to do anything if I were to enter this particular currency pair. It's a wait and see. Traders are wondering what direction to take. Shall they take it lower still, or shall they rebound and make it back up from here? It's anybody's guess, and the bottom line remains that you cannot make that decision based on a open candle, on an active candle, as I like to call them. And again, this literally applies to every single commodity that you trade. It's the same here. Let me show you another one yet again. This is what, the USD CAD, or the Canadian dollar, and we're having the same play. If I am going by what I'm seeing this live candle doing, well, I am bound to say that probably this will continue downward from here on forward. So I want to be ahead of the game. I want to lock in a few extra pips to cover my spread. So I'm just going to enter a sell signal, a sell position from here. It may be accurate, it may not be accurate. This is not the way you want to trade. You want to first of all have an overview of the entire market, which in this case quite obviously is flat, and then you want to see where price is truly heading. Again, a live candle is not telling you where price is heading, because the high hasn't been determined, the low hasn't been determined, the close hasn't been determined. The only thing that has been determined is the open. And you cannot make a trading decision on just the open of a bar. You have to have the whole picture. That's the little secret that you don't hear about, that no one talks about, that I'm now sharing with you. You need to make your analysis on closed bars. Those are accurate, those are given. You know what you have, and then you just need to analyze it in such a way that you have some reasonable prediction of where the market might be going, whether it's a continuation up of where we are now, or if it will maybe reach this height right here and then reverse back down. You have some understanding of what might take place, but again, you will never be 100% accurate, because no one can predict where price is heading. No one. I'll say it again. So this is what you really need to be looking for. Now, I understand that some of you are going to say, yeah, but this is old data. I am now basing my decision on information that already passed. Yeah, you're right. And while this could be called a bit of a lag, if that's what you want to call it, the fact of the matter is it's far more accurate than basing your decision on an active bar. Since I've been talking to you now, this bar has gone from flat to bull to now bear to retracing slightly again. How can you possibly base your trading decision on that? It's not possible. You are asking for trouble. You are asking to lose money. You need to base your trading decision on closed bars. It's the only way you get an accurate view. Anyway, I've now shared plenty of examples with you why that is the case. I've also shown you why that works. And now it's up to you to analyze and, take this further. For example, let's say that you want to do a very simple trading strategy called the moving average crossover, which is a well-known trading method. I have the 21 here already, so I'm going to add the 50 to that. Here we are, moving average, and we'll take both cases exponential because it's smoother. Let me change color so we can differentiate. Doesn't matter what color I use. Here we go. And now you go. Now, in this case, the premise of this trading method here, which is very, very simple, is if the fast EMA, which is in lighter color, crosses above the slower EMA and price is above the fast EMA, you got a buy signal, and the reverse is true for a sell signal. Well, the fact of the matter is, if you would have based this on just the active bar right now, what would you do? Do you have a sell signal? Do you have a buy signal? Is the market flat, consolidating? What is happening right here? You cannot base that decision on just the active bar. It yo-yos back and forth, and you need to be able to deal with accurate data. And accurate data at this point in time, if I go with closed bars, this one tells me it's a little bullish. The rest of them right here are bearish. So this tells me that perhaps this may be going down and will continue going down to approximately maybe right about here. And then what? So because the fast MA has not yet crossed the slow MA, personally, I wouldn't enter a trade no matter what the bars are telling me, no matter what price is telling me, active or non-active. I would wait till at least the fast MA has crossed below the slow MA. Then I would make sure that price is equally below the the fast MA, and then I would enter more than likely if the previous bar indicated a bearish bar. I would then enter a sell position based on where support and resistance levels are at the time of entry. So again, this is really the harsh truth behind successful trades. The analysis of those trades are all based on closed bars, bars that have been completed, bars where you have accurate open, close, high, low, where you know exactly what price did. And you can, again, not base that on an active bar as you've seen now, going back and forth, yo-yoing up and down. Now, granted, I am intentionally, for the purpose of this video and to show you this, what I'm explaining on a 1 minute chart, on a 1 minute time frame for all my charts here, so that you actually see the moving. But this works exactly the same for 5 minutes, 10 minutes, 30 minutes, 1 hour, a day, whatever your preferred time frame of trading is, works the same way. The only difference is that the result may be a little slower taking place, but it's the same concept. You cannot analyze proficiently on a candle that is still moving back and forth. You have to use closed bars. This is a short video, but I hope it was insightful and you got something good out of it, because again, as I mentioned at the start of the video, very few people actually will talk about this. In fact, hardly anybody, but I am, and I'm telling you now what the real deal is here. Again, start doing your analysis based on closed bars, not on an active bar. You're asking for problems. You're asking for losses. Anyway, enough said. This is Load with Black Bear Dog Training signing out. Until next time, God bless.